This is Rod Kusanen, Spooman for Risk, to discuss our range bar indicator and some of the improvements that we've made since the last version. To start off with, we're going to isolate these range bars. They're painted in yellow, and the first part of the definition to a range bar is that the difference between the high and the low of the bar must be at least 2 ticks. The second part of the definition depends upon where the close happens to be. Now, in any case, the close of a range bar will be either at the high or the low of the bar. On this bar here, the bar closes at the low. But now what makes it particularly important to us is that the subsequent highs of the following bars are not greater than the low, at least not immediately. Over here we have a range bar that closes at the high. The subsequent bar lows are not less than the high, so we isolate that. And the thing that we want to be able to isolate is the bar that does not have subsequent bars immediately following the range bar itself. This gives us an opportunity to take advantage of a trade. Now, what we find interesting about range bars is that they have an extremely high probability that subsequent bars will intersect the difference between the high and the low of the range bar. So, for example, this bar here forms, the next few bars do not intersect, so we want to take a long trade right back up to at least the midpoint between the high and the low. So we have a nice stochastic down here. Stochastic tells us when to enter that trade right in here. And we're going to ride that up a few ticks to at least this point here. Okay? Then we have another range bar that takes place here. We're going to enter a short trade and ride that down to the midpoint. Now these are scalps, and in some cases there's not much of an opportunity to trade. For example, here. It closed at the high, but within 2 ticks, well, it wasn't 2 ticks, but just a few bars later, it comes back down and intersects. Same occurs here. But over here, we have a tradable situation. We've moved 1, 2, 3, 4, 5, 6 ticks above that range bar, and now we just want to short that and ride it down to at least the midpoint. Again, here you've got 4 ticks above. Ride that down to at least the midpoint. Now, the indicator itself has some settings that will allow us to adjust how we want this to be appearing on the screen. The min ticks, or the minimum ticks, establishes the range between the high and the low. Now our default setting is 2. We find that that is the most predictable, and it occurs frequently enough to make it tradable. Now you can set it higher if you want, but you won't see as many instances of that. Or on a single 100 tick bar, which is what we're plotting here, we will not find very many instances where the spread between the high and the low is 3 ticks. Let's just take a look. All of those bars that had just appeared on the screen have now vanished. And just a quick look through the course of the day, we don't have any other bars that meet that definition. So 2 is a very good number. We might also add that that applies particularly to the time frame between the open and the close of the New York Stock Exchange. If you start to plot range bars in the after hours market, they are not as predictable. Here are some instances of range bars that occurred in the after hours market. These are 3-tick range bars. On this particular occasion, they did prove to have opportunity for trading, but that is not always the case. So just be cautious if you try to trade range bars in the after-hour market. And again, the point of the matter is, here you have this range bar at the low, you want to short that and ride it down to the midpoint. Here's another range bar where you want to go long back up to the midpoint. And when we say midpoint, since this is a 3-tick bar, you're probably safest to go for the to go 1 tick below the low, or 1 tick, 1 tick above the low, or 1 tick below the high as far as the target. Okay. Now, the next part of the equation, let's go back to our general market activity. We'll move this back to 2 ticks. The next setting, X bars, refers to the number of bars to the right of the range bar, where we're going to check to see whether the bar meets our definition. So in other words, this is checking only 2 bars to the right to see if either the high or the low intersects where the bar closed. If we set it to 2, for example, what that means is that, we'll take this bar for example, it checks only the next 2 bars to see whether or not the low here was less than or was less than the high of the bar. Because if it is, all right, we're not going to paint that. We have 1, 2, looks like 3, 4, maybe 5 bars here. So if we change this to a 5, a strength of 5 to the right, some of these bars will be eliminated. Okay. So the bars over here got eliminated, and that's fine, because sometimes you wouldn't have been able to trade it anyway, and so if you really want to look for a good opportunity for trading, setting that strength just a little bit higher works quite well. But there's no point in setting it too high, because this will happen typically very quickly, and if you're going to get in on that trade, you're going to want to get prepared fairly quickly to take advantage of the scalp. Here, for example, it was set to 5, but there was barely any time to get into that trade. Same over here. Here, however, there was plenty of opportunity to get into that scalp. Over here, not so much, but still a chance. Not much of a chance here. Here's a good chance. Here's a good chance. And here's an incredible chance. And in fact, I'm not really sure that this one got hit. Let's take a look. We'll draw a horizontal line here. Market moved down considerably. And don't think that it moved up enough today to get there. No. So that's left over for the after hours market, or since this is a Friday, that range bar should get hit sometime Monday morning. But you had other opportunities here obviously not, and that was it. So not every day will produce as many range bar opportunities, but to simply have them plotted on the screen, you can just use a simple stochastic to look for opportunities to enter that trade, and you will have a very high probability that the range bar will get intersected, which serves as your target for your exit. In previous versions of our range bar, we didn't use a right strength approach to filter out the range bars. Now we are, and the range bars stand out far more clearly. The setting to the range bars will also give you the option to change the color of the bars, as well as change the strength or the weight of the bar. So if you really want to make it obvious, set it up in some fashion that the bar really, really stands out. Okay, so that concludes our discussion of our range bar. It's part of our package of indicators, which is available on our website. We don't really sell the range bar as a separate indicator, but it is a very, very good indicator. It's a simple indicator, but my goodness, it's worthwhile. It's definitely worthwhile to have, because you can isolate some beautiful opportunities for a manual scalp and look for that opportunity the next time you're trading with this particular indicator. So that's our discussion for today. This is Rod Kusin and Spooman for Risk.